Hi, welcome to today's webinar. We thank everybody for logging in who's listening live for us today on our presentation on which entity is right for your checkbook IRA. We have a lot of webinars from time to time where people are very interested in learning more about the checkbook IRA. So we brought a guest on today to talk more specifically about the different types of entities that can be used with that type of structure. So we're going to bring that person on in a few minutes. But again, we've had such a lot of good feedback on these seminars in the past. We wanted to bring in somebody a little more expert to talk on this particular subject. Now, I'm your moderator. My name is Scott Maurer. I'm the Director of Business Development for Advanta IRA. I've been here with the company many years now. I teach classes from time to time. Also manage the education sales offices in both our Tampa and Atlanta office, and certainly we work with people all over the country. So I'm glad that you're here. Now you'll notice that I am a JD, which is a Juris Doctorate, so I am an attorney by degree, but I cannot give any legal advice for our clients, and so that's why today we've brought someone on hand who can give us more of that information when it comes to making legal determinations regarding an account, especially in the realm of talking about the checkbook IRA, which we get a lot of questions from time to time that we just simply can't answer. So hopefully we'll get some of those questions answered for you today. Now, as we go through the presentation today, if you have any questions at all, you will need to just type those questions into the chat box on your screen. It should be in the lower left-hand corner of your screen. Type that question in. We'll make sure we get to that question hopefully before the end of the presentation. Also, if you're listening to the recorded version, my information is here on this slide. We'll give out the information for our guest speaker a little bit later as well for you to reach out to either one of us with those questions that you have. Just a little bit of background on Advanta IRA for those of you who are not familiar with what we do. We're a self-directed IRA administrator. We hold non-traditional assets like real estate, like private notes, or like the checkbook control structures we're going to talk about today. And across between our two offices in Atlanta and Tampa, we hold over $1 billion in assets, have over 5,800 active accounts as well, and really pride ourselves on our one-on-one customer service that we offer to all our clients. And also we try to offer a lot of different and cutting edge and kind of new educational events as well, and really providing as much information as possible, whether that's through an event like the one you're listening today, whether it's through our on-demand learning center on our website, from our blog articles as well. We try to give a lot of diversity to what we talk about. Certainly we talk about the basics of self-directed IRAs a lot, but like to bring in kind of those ancillary experts. We had someone on recently talking about insurance for insuring your real estate property. We've had an attorney come on and talk about different types of structures that your IRA could invest in. We've had tax advisors talk about the tax implications as well. So we try to bring in a lot of diversity that we're talking about, and like I said, today is no different. And again, one thing that we can't do at Advanta is we do not give legal, tax, or investment advice. We hold non-traditional assets inside of an IRA account, do all the administration, but we can't get involved in giving any tax, legal, or especially investment advice to our clients. So we encourage people to consult with your attorney, your CPA or tax advisor, your investment provider possibly as well before entering into a transaction. And like I said, the person we've brought on today fits one of those categories and be able to give you some different advice if you employ their services as well. Now, for those of you who have not heard of a self-directed IRA, the reason why you probably have not heard of a self-directed IRA simply is that most IRAs, most 401k plans that people have are held by an investment bank or an investment broker who's going to offer you only those products that they sell. They sell mutual funds, they sell stocks, they provide you a CD or money market account. They're not allowing you to invest in real estate. They're not allowing you to invest inside a checkbook structure because it doesn't fit within their particular business model. So a self-directed IRA is one in which you have a lot more control over the investments that you're making, and you're not going to hear about these plans without doing your own research, because the banks and brokerage firms are not going to advertise that you can take your money away from the accounts you have with them, put it into a self-directed IRA, and make a different type of investment. So the reason why people haven't heard about it is simply their funds where they're currently held, they're not being advertised that they have these other investment possibilities. Had a quick question pop up. Just a reminder, yes, those of you who are listening live, we are recording this presentation. We will be sending out a link later as well to the recording for anyone who wants to go back and listen to it a second time. Now, the accounts that can be self-directed, if you're sitting there thinking, well, self-directed IRAs, I'm listening to the presentation today, I want to buy real estate, or I want to possibly do the investing using a checkbook type structure, what plans even qualify to be self-directed? Any type of IRA, traditional and Roth accounts, your individual IRAs, your SEP, your simple IRA, if you're self-employed, you own your own small business, those can be self-directed as well as any form of 401k, 403b, thrift savings plan, et cetera as well. You have those old employer-sponsored plans that you worked for a company or you worked for the government a number of years ago, you left that job, that money is still sitting in that old plan. You can certainly roll that over and self-direct it as well. And the mechanisms for moving money between these accounts are fairly simple. You can either transfer custodian to custodian, a direct IRA to IRA transfer, or you can do a direct rollover. If you have money with that other custodian, that old 401k plan, do a direct rollover to an IRA. Now, the terminology may mean the same to a lot of you, transfer, direct, or rollover. What's the difference? It really doesn't matter so much on your side, but we just make sure it gets recorded properly and coded properly. Either a transfer or a direct rollover is a tax-free movement of money, so you're not going to have any tax consequence for moving from an IRA at a brokerage firm to an IRA at Advanta, or rolling over from that old 401k into a traditional IRA as well. Typically, these transfers or rollovers take anywhere from a few days to a few weeks, depending on where the funds are coming from and how they're being sent as well. Now, again, what makes a self-directed IRA different than other types of accounts are your investment options. Now, some people have a self-directed IRA at a brokerage firm, but you're still being limited to picking your own mutual funds or picking your own stocks. They're still offering you that kind of limited investment window. Self-directed, again, really refers to the ability for you to buy real estate, buy notes and mortgages, other types of investments. Again, the checkbook control that we're going to talk about today. There's a lot of different things you can invest in with an IRA. The only two things you can't do, you can't buy life insurance and you can't buy collectibles. So the only two prohibited investments inside of an IRA. You also, if you're investing in real estate, have to be careful of buying property that you want to live in or vacation. It's a little bit different discussion for a different day, but your self-directed options really are quite broad in what you can do within these particular accounts. Now, when you make an investment inside your self-directed IRA, there's kind of two ways generally that people choose to have that IRA administered. Now, I'm going to use real estate as an example, but this can be true of other investments as well. If you used your IRA to buy a rental property, and that rental property is going to have, hopefully ongoing rents flowing back into the IRA, your tenant's paying rent, that's going to be coming back into your IRA account, or you have ongoing expenses, you might have condo dues, HOA fees, monthly maintenance items as well, those need to be paid from the IRA. And there's typically two ways people would go about administering that particular piece of real estate inside their IRA. One, you could have simply the custodian, in this case Advanta, administer the account. So you transfer your cash from your investment provider, Charles Schwab, Fidelity, wherever your funds are currently held, move that cash to Advanta. You direct us to make the purchase in the name of your IRA account, and then going forward, once that piece of real estate has been purchased inside the IRA, you'd have your tenants mail their checks directly to us to deposit into your account. Any expenses that you have related to that property, again, going back to those maintenance items, property taxes, HOA fees, etc., you direct us to pay those bills out of the account. So we have all of the extra uninvested cash sitting in your IRA account. You tell us when you want to issue a check from the account in order to pay that bill. And certainly that's how a lot of our clients have us simply holding the real estate and doing that type of work for them inside their IRA. Now, another mechanism to use, though, and what we're going to talk about primarily today, is really the type of checkbook control account where when you buy that piece of real estate, you as the IRA owner want to have more control over receiving those rents and paying all those bills in and out of the account. It may be because you're buying property at auction and you need funds available right away to you, or you're worried about some late emergency repairs where you want to have the ability to stroke a check right there to the vendor or the workman who's helping you out on the property. And you can achieve that kind of control over your IRA through what they call a checkbook control IRA. And again, there's a couple different structures you can use that we're going to go into today. But what checkbook control allows you to do is to receive the rents from your property, from your investment, into a particular account for that is owned by your IRA, and also pay all those expenses yourself. So you do not have to contact Advanta each time that you need a check for an expense or you need to deposit the rent. The checkbook control structure can reduce some of your overall IRA expenses and certainly can shorten the time somewhat for an investment as well. Now, when using the checkbook control, there's typically set up as an entity, and again, we're going to go over the couple of different types of entities today. An entity in which the IRA owns 100% of the overall structure, and the IRA owner is then in control over the funds through a bank account that has been opened in the name of that entity as well. So the IRA owner writes the checks to fund investments, pay bills, and also, again, if the IRA owner wants to be in that type of control, we do recommend talking with an attorney, which is why we've brought our guest on today, somebody that certainly can help you out in that realm as well. Now, the two main types of structures that we see used for checkbook control. One is an LLC. Now, just the kind of key components of an LLC so everybody understands the terminology. An LLC, the owners in an LLC are considered the members. So in this particular case, if your IRA is investing in checkbook control through an LLC, your IRA is going to be the member, the owner of the LLC. Now, the manager of an LLC is the individual who actually is the decision maker responsible for writing checks. And in the case of an LLC, a lot of times with checkbook control, the manager is the actual IRA owner themselves personally. So the IRA is providing the cash as the owner. The IRA owner, as an individual, is the manager and decision maker. And the documentation we need to see at Advanta is we need to see an operating agreement. An operating agreement is very similar to the bylaws of a corporation, but the operating agreement will list who the members are, if there's more than one member, all the ownership percentages as well between those particular members. So just want to get some terminology out of the way. The other main type of structure that we see with checkbook control are individuals using a trust. Now, we had someone ask a question about land trusts. Maybe we get to that question a little bit later towards the end of the presentation. But I'm talking in general just about regular trusts. Trusts can be formed for a variety of reasons. There are revocable trusts for estate planning purposes. There are special needs trusts to care for certain individuals who have special needs in providing cash and funds and assets to provide for their care. There's life insurance trusts as well. But the parties in any type of trust, whether it's a revocable trust, a special needs trust, or as we talk about today, using your IRA to form its own trust, you're going to have a grantor. And the grantor is the party that contributes the assets to the trust. In this case, with an IRA, the IRA is contributing cash, typically, into the trust as the grantor. You have a trustee who's the individual who will then manage the assets, and typically a lot of times the trustee needs to be either a physical individual or a company who has somebody that can write the checks and make decisions as well. And then ultimately in a lot of trusts you have a beneficiary, obviously the party who's ultimately going to receive the assets in that particular trust. And the beneficiary, the interesting thing when you do an IRA trust, the IRA is generally the grantor. It's contributing the cash into the trust account. And the IRA is also the beneficiary, because the IRA, if that trust is terminated, the cash, the assets from that trust are ultimately going to flow back into the IRA account as well. So I just wanted to kind of provide that information to give everybody a general idea. When we talk about LLCs, talk about trusts, just somewhat the terminology is. But at this time, I want to kind of switch gears a little bit and stop my portion of the presentation and bring on our guest, Kellie Scott, who is with Royal Legal Solutions. Kellie is an attorney. She graduated from Christopher Newport University with her Bachelor of Science degree, and then got her law degree from Florida Coastal, graduating in the top 5% of the class. So we got someone who knows what they're talking about definitely in today's presentation. It was during law school that she really took an interest in real estate specifically, helping people really understand how they can keep, obviously, the assets that they're purchasing and protect them as well. She's been with Royal Legal Solutions for 2 years, or I guess 2 years, almost 2 years here coming up very soon. She resides in North Carolina with her husband and 2 fur babies, as she describes them, and loves spending time with her family in both Florida and Connecticut as well. So at this time, Kellie, I want to welcome you to the webinar. How are you doing today?
Thank you, Scott. I'm doing really, really well. And how about you? How about yourself?
Well, I'm doing great, and I'm hopefully set the table up a little bit for you, give the people some information. But at this point, I'm going to turn it over to you. And before I turn it over to you, I just want to remind everyone who's listening live, if you have a question that comes up while Kellie is speaking or something that I talked about already, put it into the chat box on the screen, and we'll make sure we get to that question as we go along. So at this point, Kellie, I'm going to turn it over to you.
Wonderful. Thank you, Scott. And yeah, you did a wonderful job, actually, of pretty much presenting the basis for what I'm going to go over. So I'm going to take what Scott said, building upon that self-directed IRA and how we at Royal Legal really help our clients to gain that checkbook control through the use of, like he said, either an LLC or the business trust or the trust. I'm going to kind of skip through a few of these because they were actually kind of setting up a little bit about what Scott said. So like I just said, LLC versus trust, right? At Royal Legal, we actually do 2 types of LLCs. We call them an IRA LLC or an IRA Series LLC, and I'll go into depth about those 2. Or we also do an IRA Business Trust. To pick either one is going to be very client-specific. We sit down and we figure out, the LLC is typically for more of a high risk. Let's say you have multi-unit properties or Section 8 housing that you're looking into purchasing as a real estate investment. That's going to be a little bit more high risk. So we would definitely gear you more towards one of the LLC structures. The trust is a very big favorite of our clients and also us for the fact that it's low cost. And there are some benefits with the trust, especially some California residents, that the LLC doesn't provide. And again, I'll kind of get into that. But just to go over the bird's eye view of it, an LLC, again, we typically do for high risk. An IRA LLC, it's just a traditional LLC. Some people sometimes get that confused a little bit because they hear IRA LLC and think it's a different type of LLC, but it's not. It's a traditional LLC. It's going to have an EIN. We obtain it through the IRS. It's going to have an operating agreement, just like an LLC does, and it's going to be filed with the Secretary of State. So it's actually a publicly filed entity. So traditional LLC or series LLC, and I'll get into that, but that's the other type of LLC that we can do. Going to have a tax return. We use this one for asset protection. So with the LLC, it's a publicly filed entity with the state. So you would file a certificate of formation or articles of incorporation, whichever state. It's going to have an EIN, just like a normal traditional LLC. Now, with a traditional LLC versus a series LLC, which will be coming up in a few slides, there's no compartmentalization for a traditional LLC, but there is a series. And that's where the land trusts come into play. That's where the individual properties are compartmentalized into individual child series. That's going to be a series LLC. A traditional LLC is all in one pot. So there is no compartmentalization. But because it's filed with the state, there is going to be a filing fee. They range different, they're differing for states. Texas is $300. I know Georgia, I just looked the other day, is $99. So actually they'll range typically from $99 upwards of, I think there might be a few that are over $500. So with an LLC, there is going to be a little bit more of a fee, especially if certain states require annual fees and annual reports. Texas doesn't, but a few other states do. So those fees kind of can start to pile up. So that is something that we always look at. And that's one reason a lot of our clients do veer towards the IRA Business Trust. With that one, you'll still get an EIN. Instead of an operating agreement, you're going to have a trust agreement. It's going to have, you don't necessarily file it with the state because trusts are not publicly filed. That should actually be zero. Apologies. But there is no filing with the state when it comes to a trust. A trust is a private agreement. And so because it's not a publicly filed company, you're not going to have those yearly fees. You're not going to have that filing fee. You're not going to have those annual reports. You really only have a yearly fee of $250, and that's for maintenance. But that will not change. And that, when it comes to the LLC, remember, it's constant. Every year can be upwards of $500 plus the annual report. So I'll go to the next slide, and I do think it's going to go over more of the basic LLC. And that's what I was just talking about. Traditional LLC, filing, EIN, operating agreement, no compartmentalization. Here is where a lot of people are interested in. It's something that it's more up and been around for a while, but just now people are really starting to kind of grasp onto the idea of what's called a series LLC. With both of them, traditional LLC or series LLC, like Scott said, the member, right, the owner of the LLC will be the IRA, your self-directed IRA. The manager, which is the person that's going to be managing everything, this is where you get that checkbook control, is going to be the client. Okay, so with the series LLC or traditional LLC, you can kind of see here, I'll have more a little bit later in the slides. This is just a general. But the parent LLC, the series, will allow you to create individual child series. Those individual child series are treated as separate entities, but they are not having to be filed. So what that means is the parent is filed with the member and manager, and then internally you create what's kind of like an internal certificate of formation, and you file these individual child series internally. Okay, so they're separate entities, but they flow back up to the parent. But you're not having that $300 every time you turn around. So you're in a traditional LLC. If you had three, that's a $300 filing fee. $900 right there for three LLCs. This, you have one $300 filing fee, and then the individual child series have no filing fees with the state. But again, it flows up to the parent, so you're still only going to have one EIN. You're going to have one filing and one tax return. I'll go into a little bit more here. So this gives you a little bit more information. How we create the series LLC. Since the IRA, the actual self-directed IRA is the member, it's going to be treated as a single member LLC, okay? And so it should be treated as a disregarded entity. Now, a series LLC can also be used without an IRA. You can create a series LLC also with, we do anonymous trusts to act as member, and I'll get into that too. But you can create a series LLC without the use of an IRA to use for real estate investments as well, because the series structure with these individual child series, you're compartmentalizing each property into an individual child. How it's taxed is that series LLC, if it's you or you and a spouse, it's going to be treated as a disregarded entity. Everything is taxed on Schedule E of your personal taxes. If it's you and a partner or multiple partners, it's going to be it's a partnership issued K-1, okay? But there's no really separate business filing. When I talk about, I'll come back to the risks, but when I talk about the anonymity, this is where a lot of our clients like it. This is outside of the IRA. This would just be a series LLC that we at Royal Legal Solutions do, where instead of you as the member, we would create an anonymous trust, and when we do the filing, instead of putting you on the file, we would put the anonymous trust. And so we call it an agent trust, and then you're acting as trustee of that agent trust, and that agent trust is also the manager. But what that is doing is it's creating anonymity. Okay, without the anonymity, the series LLC, if you're using it for your IRA, the IRA would be the self-directed IRA would be the member, you'd be the manager. But you wouldn't have as much anonymity with the IRA as you would without. And I'll take questions after and explain that more. So this is the basic structure of a series LLC that we do with anonymity. And as you can see, that parent, like I said, it was create an individual child series. And then we want to do another layer of anonymity, and that individual child series would create a land trust. That land trust would actually own the property. So this is where people are asking about land trust. The land trust in a series LLC structure would own the property, with the individual child series being the beneficiary, and then the parent being the member of that individual child series. Now, if you're using the IRA structure, the IRA series LLC would purchase the property and with the parent, and then with the parent series LLC, and then they would transfer it into a land trust that was owned, by the parent. But there wouldn't be that anonymity from the beginning because your IRA would be issued or filed as the member. Now, with the traditional LLC, just the IRA LLC, again, the self-directed IRA would be the member manager, and once it's funded with your IRA, with the money rolled over or transferred from the IRA into the bank account for that LLC, you would then just buy the property in the name of the IRA LLC. Again, with the traditional, you wouldn't have the compartmentalization. With the series, you would. So the risks of the series LLC were very upfront about series LLC because, like I was saying, it's kind of a newer use. It's been on the books for a while. It's created by statute. The states that do have it, the statutes are very clear, and the statutes are law. There's not a lot of case law, but remember, case law just interprets those statutes. So the fact that there is a lack of case law is very indicative of how strong those statutes are in the states that allow the series LLC. But again, you can still use those series LLCs in other states through those land trusts. And again, we can get into more detail if somebody has a specific question, if they really want to know more about those land trusts. But basis is once those land trusts own the property, the LLC is technically not owning the property, and so it's not doing business in that other state. So a foreign registration doesn't need to be done if the land trusts are going to be owning it. That's the series LLC with anonymity, which would be not included in an IRA series LLC, or you can do the IRA series LLC, still have the compartmentalization, just no anonymity. Why does the business trust, and this is where a lot of our clients, even unless they're super high risk, right? Because the high risk ones, you kind of do want to go more towards the LLC. The IRA business trust it's a low cost, right? It's going to be low cost because it's a trust. Like I was saying, the trust is really the one that's going to be owning the property, doing the business. So because it's a trust, it's not a publicly filed entity, you're not having to do a foreign registration everywhere you go where you want to buy property because it's a trust. So, that's a couple good things, right, about the IRA business trust. It moves with you. It's a low cost. It gives you a lot of the same benefits, but without those, you don't have to have a registered agent. You don't have to have the filing fee, and no foreign registration. So those are really what we do at Royal Legal Solutions is we're going to take those self-directed IRAs that you have. We're going to talk to you, figure out where your investments are, what kind of real estate, high risk, low risk, long term, what is going to be your kind of, is it worth spending the more money for an LLC? Are you going to have a ton of properties? And we might go more towards a series LLC, right? Your series LLC. Do you want it to be something to work with your IRA, or do you want to have a separate series LLC for your real estate investments outside of your IRA, or a combination of both, or the traditional LLC, which it's not going to have the compartmentalization, but it does offer a little bit more protection for, again, those high-risk real estate investments. So that's what we do at Royal Legal. We take your self-directed IRA and we either create an LLC or a business trust, and that allows you to have that checkbook control because, like Scott said, for an LLC, you're going to be the manager. For the trust, you're going to be the trustee. And so you'll be able to make those decisions. You're not having to go back to your custodian, no offense, but you're not having to go back and ask your custodian for approval for everything. You can go out there, and once the trust or the LLC is funded, that's your money and that's your checkbook to make those investments. So at this time, if we have time, I think we do. If there are any specific questions that anybody needs, or shoot them my way, or Scott, if you want to kind of moderate that.
Yeah, we've had a number of questions come in already, and I'd encourage people who have, as you have more, even as we talk, just continue to submit them. We do have some time. A couple of quick questions. Someone asked, what does EIN stand for? I'll let you go ahead and take that, Kellie. It's fair, but that was asked a little while ago when you were originally talking about the difference between LLCs and trusts.
Yeah, an EIN is what's called, and it's actually an FEIN typically. It's going to be a employee identification or employer identification number from the IRS. It's what the IRS uses pretty much to tax and track your LLC. And so you obtain it using your social, that kind of thing. And then that number is very specific to your LLC. And so, like, if you have a bank account, you want to open a bank account, the banks are going to typically want, like Scott said, your operating agreement. They're going to want to, which is what he would want, your signed operating agreement, your EIN. It gives the bank a little assurance, right, that everything's above board and that they need that EIN in order to open it through the IRS. So the bank accounts are going to need it. I don't really want to go too much into depth. It's just that's what an EIN is for. Every LLC should typically have one.
Yeah, and practically speaking, for those of you who are doing it or haven't done it before, an EIN, you're going to need that to get a bank account. The bank that you're working with is going to have an EIN to associate to that entity's bank account. That's typically the most important reason we see it. But as you said, Kellie, there's a few other reasons as well. Just a couple other quick questions. Someone asked if we can put the slides back up. I will let you know that a copy of the slides will be sent out to everybody, and you'll also get the recording, so you won't need to worry about that. Someone asked about how do we download the free gift. Somebody said there's no link on the iPhone app, but it looks like if you just go to royallegalsolutions.com/Advanta IRA, you can get this the free report that Kellie is offering you. I'll leave this slide up for a little while. That's got the website link on it. Again, royallegalsolutions.com/Advanta IRA. So let's go to a couple more questions we had. Someone said, if the LLC is collecting rents, do some jurisdictions consider that as doing business and require out-of-state entities to register with that particular state? So we're, I guess, getting into questions of maybe, I think someone else had a similar question of where do you set up the LLC, or do you have to register in what particular state, or does it matter?
Actually, and that's a really good question. So there's a couple ways that we would say to collect rent. So if you're using those land trusts, right, in the Series LLC structure, remember at the end of the day, the land trusts are actually the owner of the property. So the land trust would be collecting the rents, but you can collect those rents, in your individual name as property manager, and with the right accounting, making sure you have separate paper trails for each, and you can have one big account for all of them. But you would actually, so the LLC, the LLC is not collecting those rents in its name because the land trust actually own those properties. So, but if you, let's just say you wanted to have an LLC or your IRA LLC, if it's an IRA LLC, yes, if the IRA LLC is the one that owns the property and is collecting those rents, yes, that is doing business in the state. So if you have all your properties in Ohio, we would do an Ohio LLC and then turn that into an IRA LLC. If you had multiple properties in Ohio and you still had some in Texas, yes, if that IRA is going to be, LLC is going to be collecting rents in Texas, you'll most likely have to do a foreign registration, right? But the use of those land trusts, the use of a business trust, one of the IRA business trusts, as long as a trust owns it, you're not having to do a foreign registration.
That's a great answer. Again, I guess, too, I'm sure, Kellie, you don't know all the laws on all 50 states. It's something to make sure you check on, because some states do have some exemptions for even registering your LLC if it's, depends on what you're doing, again, and whether or not it's doing business or not.
Right.
Someone had a question, said, please review kind of when we're talking about a trust, you're talking about an LLC. what role they say what role Advanta, which I'm assuming, what role is their IRA playing, and what role is the actual individual playing in those structures?
Sure.
I talked a little about it a little bit when in kind of the end of the slides I was doing, but Kellie, if you want to address that also.
Sure. So Advanta would be the like setting up your self-directed IRA, right? So I don't know, there's going to be different scenarios, right? So if you have an IRA, a traditional or with a different custodian, and you want to get a self-directed IRA, right? And so that's where Advanta comes in, and they're going to roll that over or create a new one to get yourself a self-directed IRA. Because like Scott was saying, the self-directed IRA is going to allow for more non-traditional investment. So that is their role, is actually setting up your IRA account, your self-directed IRA account. What we then do is that self-directed IRA, we then take that and use it either in a trust, in the IRA business trust, that self-directed IRA would actually be the creator, the grantor of that trust. They would be creating that trust. They would actually also be the beneficiary. So a beneficiary in a trust receives the benefit, right? They have the beneficial interest. They're going to get the proceeds. So your self-directed IRA in a business trust, IRA business trust, will be the grantor and the beneficiary. You individually, or the client, will be the trustee. What I mean by trustee is it's the equivalent of a manager. So that's where the checkbook control, because the trustee is the one that's going to be managing that trust, managing those funds, making the investments. So that's where the checkbook control comes from an IRA business trust. And an LLC, the self-directed IRA, will be the member, quote-unquote owner. They're going to get the profits of that IRA, just like an owner, that LLC, just like an owner of the LLC would. The manager will be you. So instead of a trustee in a trust, it's the actual manager. So that's where you're getting the checkbook control. You're going to be the manager of the LLC. You have your finger on the purse strings. So those are the individual roles of the self-directed IRA, the trust, the LLC, and Advanta.
Right, a couple of questions here dealing with trust specifically. You kind of answered one of these already, but I think, does the trust, if you're setting up a trust to own the real estate, does it have to be based in the state? Does the trust have to be based in the state where the rental properties are actually located?
Typically, no, right? Because, like I was saying, that trust is not filed with the state. It's not a publicly filed entity, right? And so just how I kind of refer to it as some of the clients, just think of the trust as like an individual, right? You buy property. I'm, a North Carolina resident. If I want to go to Florida, I can buy property without having to do any kind of registration in Florida, right? Well, that's what a trust can do. A trust can be created in one state, and it can go to another and purchase property. An LLC is different because it's filed. If it's a Texas-filed LLC, and it goes to do business in Florida, Florida's like, no, you're a publicly filed entity. You're over there in Texas. If you want to come over here and do business, you need to do a foreign registration. And again, it will be state-specific. We could go into, this is just kind of for example purposes. But yes, so a trust does not need to be filed or it doesn't need to be, quote-unquote, formed in the state where you're going to have the rental properties.
Someone asked, I think, is it more expensive to use a trust than an LLC to hold the real estate? I think you answered that kind of at the very beginning, that it's actually more expensive usually to have an LLC than it is a trust.
Yeah, because so with an LLC, you're going to have those initial filing fees. So with both of them, there is a fee to create them, right, to set up the documents. Those are going to be internal fees that come with both of them. But outside of that, when we're talking about kind of the outside, the filing fees, the registered agent, when you create an LLC, there's going to be a filing fee with the state. Those are state specifics. We have no control over those. And they can range anywhere from $99 to upwards of over $500. That's just to file it with the state. Also, a legal requirement is you have to have a registered agent. Every LLC has to have a registered agent within that state. Those fees can range, unless you're doing it yourself or you have a third-party, a trusted party that will act as your registered agent, you have to hire a company. Those will range anywhere from $49 to $99 a year. Further, some states require annual fees and annual reports. And so you're having to dish out between $100 and $500 annually that's just the state fees to keep that LLC current, right? Or you'll forfeit it. So, and then some states will have franchise taxes, that kind of stuff. So an LLC, once the initial kind of creation or the formation on our side of getting all the documents prepared, there's still those outside fees. With a trust, with the business trust, there's the internal fee, but there's no public filing. There's no registered agent. There is a $250 just kind of annual maintenance fee, just to make sure that everything is still compliant. We stay up to date on, all of the laws. So that is why the business trust is typically, going to be cheaper than that LLC.
Another question came up, and I might be able to take this one, Kellie, because it has a little bit more IRA-specific things as well. But someone said expand on the shared ownership of a land trust or property shared between an IRA LLC and a cash LLC. And I'm assuming by cash LLC they're talking about a personal LLC they have. Which should be the trustee and which should be the beneficiary of the land trust? I will say if you were looking at sharing ownership of real estate between your IRA or an IRA LLC and yourself personally or a personal LLC, if you're structuring this inside a trust, you would want the land trust in this case, to reflect that the beneficiaries are both the IRA LLC and your personal cash LLC, and the document really should indicate what percentage each of those LLCs owns in the overall land trust. Now, as far as the trustee, again, I think that would either just be you or maybe your personal LLC. The IRA cannot act in the position of trustee as it's an inanimate object. But I hope that answers the question, kind of shared ownership. And Kellie, I don't know if you've ever dealt with that before or seen people combining both IRA and personal funds into the same LLC or entity, or do you typically advise kind of to keep those separate?
Have we seen it? Yes. Do we usually recommend it or do it often? No. We typically do have, but then again, it's client specific, right? Like we really tailor everything. We spend the time with our clients and get to know them. And so, but typically, yes, it's just we don't mix the personal and the IRA. But you're right. Like if there is a trust and you want to have a breakdown of ownership or beneficial interest, yeah, you could say 45% to Sam Smith, right? And then 55% to the to the IRA or the IRA LLC or whichever it is. But that's going to be kind of we would have to really kind of talk and see what the client's long-term goal is to see which fit would be better.
Yeah, and we had a question. You just mentioned some minute ago. Somebody asked why are LLCs more expensive, and you mentioned, number one, LLCs have a filing fee which varies greatly state to state potentially, and there's also they said they didn't think, this person asked the question, they didn't think they required annual filings, and every state I've ever seen, I'm sure they all do it, every state has an annual renewal fee, essentially, basically. It's a moneymaker for the state, but it also helps each state to kind of keep accurate records of all the corporations and LLCs that are still open. So LLCs are more expensive than a trust because you have not only potentially an initial higher setup cost for the LLC and filing fees, but you do have annual renewal fees, and as Kellie mentioned as well, you have, if you're not in that particular state, each LLC has to have someone or some company in that state to serve as a registered agent. So if there's anyone needs to serve legal documents against your entity, there has to be a registered agent. So if you live in Texas but you're buying property in Florida and using a Florida LLC, you might have to pay somebody to actually act as registered agent as well. So there's a couple different fees that are involved with LLCs that make them more expensive. So to make sure I got that question answered.
Yeah, and
well.
Scott, just to kind of go a little bit more, yes. There are very few states actually that don't require an annual fee or annual report. Texas is one of them. Texas.
Okay.
Like with Texas, it's a $300 initial filing fee, right? There is no annual meetings required, no minutes. The only thing that's really required annually in Texas is through the Texas Comptroller, which is franchise taxes, and that's kind of a separate thing. It's usually a nominal amount depending on the revenue. But with your actual LLC in Texas, there's one filing. There's no annual. But let's just say Florida, right? You're going to have your filing fee, and they require you to file annual meetings or minutes and meetings. If you don't do that, your LLC will be forfeited. So you're also having to make sure that you're maintaining everything appropriately for now, when I say annual fee, annual report, they're two separate things. And depending on the state, some of them just require an annual fee, like they just want your money. You have to file it every, let's just say, May 15th. You have to give them money to keep your LLC in good standing. Or they want that fee and also an annual report. And then an annual report is typically minutes, things like that. So those are things you need to look out for with an LLC, and those fees can start to add up.
We did have one quick question I wanted to address personally. Somebody asked why there were any participation or check-ins, and did this class qualify for like 1 hour of continuing education credit? Just to address that particular question, this class is not officially approved for any additional credit, although depending on your state that you're in, you may be able to apply for or just claim this class as acceptable credit. And I can certainly provide you with a certificate of completion or verification that you did attend. So for anyone who's looking for that, please contact me separately, and I can provide you kind of whatever documentation you need to support that you attended today's class. We'll get to Advanta. Just time for a few more questions. Someone asked, does a trust in California require 2 EINs, one for the trust and another for the IRA? And I don't know if you can address kind of maybe not just in California but anywhere. Do you need a separate EIN for the IRA and also one for the trust? My experience personally that you don't need one for the IRA, but Kelly, I'll let you chime in as well.
Yeah, we have not run into that. Now, if you have an IRA LLC, the LLC will have to have an EIN, right? But not the actual self-directed IRA account itself. It's going to be the entity that, the LLC. But no, we've not run into anything where you've had to have, the 2 EINs. Now, really quickly, I want to touch on California just really quickly because it's also something that we do offer, and why the IRA business trust is particularly good for California residents is so anybody in California kind of knows, there's that I think minimum, right, of $800 a year franchise tax. Well, that's for entities, LLCs, or what there are quote unquote specific business trusts that are treated as corporations, and all of that will trigger that $800 a year. However, the IRA business trust, I know that it's called a business trust, but it's actually a revocable trust, and per the California statute, it's actually going to be treated as a non-business trust, and it does not trigger that $800 a year franchise tax. So, and that's something, if you could reach out to us, we could go into more depth. That's a whole kind of another thing, and we do have other structures for California residents involving trust. But an IRA business trust, I know it has business trust in it, and I apologize for the confusion, but it is treated by California as a non-business trust because it's a revocable trust. And because of that, it's not an entity, it's not a corporation doing business in California, it will not trigger that $800 a year franchise tax. So that is very enticing for a California resident. Now, really quickly, I see there's a question. I just want to kind of touch base on it. It says, how does a business trust give the IRA beneficiary checkbook control? Mm-hmm. As I was saying, because the IRA business trust, there are the 3 parties, remember. The grantor is creating the trust. The trustee manages it, and the beneficiary receives the benefit. The IRA, the self-directed IRA, that Scott would help set you up, is the grantor and the beneficiary, right? But you're the trustee, so you're managing it. That's where that checkbook control comes from, because you are the one with the checkbook as trustee.
Okay. Someone had a good question, too. If I purchase real estate with a trust and then later plan to purchase multiple properties, can they convert them to an LLC later? So if you buy a property or 2 under a trust, can you later then convert those to an LLC? Maybe a little bit of what that process looks like.
I mean, I don't know if the term convert, right? That might be a little confusing. As if you buy a property with a trust, if we're going to be saying you're an IRA business trust, right, and you want to, and maybe I'm getting it, but convert to an LLC, are you wanting to convert just the property, like transfer the property from the trust, or are you trying to convert your trust into an LLC? You see, so I would need a little bit more clarification on that. But just to go from, if a property is owned by a trust, you can absolutely transfer that property to an LLC. Now, with that being done, the trust would receive the proceeds, right? If it's a selling, if there is any kind of purchase, and they would go to the trust would keep those. Once it's transferred over to that LLC, all of the profits, rents would be going to that LLC. So if an IRA is somehow, if it's an IRA business trust, your IRA, your self-directed IRA, is losing that income, right? Because in that LLC. Now, if you want that LLC to also be attached to the IRA, you would do an IRA LLC. You would create an IRA LLC. You would deed through a deed, right, the property over into the LLC. And if it's an IRA LLC, your IRA would still receive the proceeds, if that kind of makes sense.
It does. I was going to answer a follow-up with that. It was one of the other questions we had. Someone said, should this all be set up before starting to purchase rental properties? I think ideally, if you know you're going to go with this structure, it's easier and less paper intensive to just do it from the outset. But for anyone who has bought a property already, or maybe you did already buy the property through Advanta using the custodial method of having the IRA on title, you can transfer. This is a question we get from time to time. If you want to set up a trust later or an LLC later, you can do that and have the IRA simply sign a deed to transfer property to either the land trust or to the LLC that you set up. So it doesn't have to be done beforehand. If it's something you've already gotten into and now say, hey, I'd like to maybe protect myself a little bit better or do something different using an LLC or trust, you can do it after the fact. But if you kind of know up front that you're going to want to use these structures, it's a little bit easier sometimes to set up the entities up front, have the cash go into them, rather than messing with having to get a deed drafted at a later date. So that certainly is something to be done. And I don't know, Kellie, do you all help with that too, as far as the drafting of the deeds in addition to the entities?
Absolutely. It just came up just last week. And after I say this, I do just want to give a really quick recap, because I saw that one person said it was kind of confusing, so I just wanted to do a really quick recap.
Sure.
But yeah, so if you want the IRA, self-directed IRA, to have any kind of interest in the property, the self-directed IRA itself purchases the property, or the LLC or the business trust that you set up purchases it, right? So if, like Scott said, if your self-directed IRA owns the property, absolutely, we can draft the deed. Typically, there will need to be some internal documentation, I think, and Scott, you can correct me, there might be some assignment kind of language that might need to be done or signed.
Sure, yes, there would be.
There is a deed, though, that would just transfer it from the grantor on the deed would be your self-directed IRA, and it would deed it right into the IRA LLC or IRA business trust. So it can be done. But really quickly, I wanted, and I apologize if that was kind of confusing, because I know a lot of these terms get jumbled. What we do is we can create an LLC, right, an IRA LLC or an IRA business trust. The IRA LLC is typically for high risk. The IRA business trust, a little bit less costly, right? If it's an LLC, we have two types of LLCs that we can create. Whether you want compartmentalization, meaning separating your assets to where if a judgment is on one, it can't get to the other one, would be a series LLC. So it would be an IRA series LLC or an IRA LLC, which is a traditional one. The traditional one does not compartmentalize. Everything would be in one big pot. Now, outside of an IRA, like let's just say if you personally wanted to do something, we did talk earlier about IRA versus personal stuff. You can create a series LLC personally with anonymity, right? And so that anonymity can't be done really with the IRA, but it can be done if you just get a series LLC. So those are the structures that we, help our clients with.
All right, great. Well, we're pretty much at the end of the time now, Kellie. I really appreciate your time today, also your patience. We had some issues, obviously, with the audio. For those of you who were participating live, I apologize for that. For those of you who are getting the recorded, we're obviously have spliced together a few different segments, so you might have a couple of disjointed parts there too. But again, appreciate you coming on. Here's Kellie's information is on this slide. To
Except
reach
my
out
name's
to her.
Kellie Scott, not Scott Smith.
Yeah,
Sorry.
a little bit there. But the phone number, the website, obviously you can go to find out more about Royal Legal Solutions. Again, they're the ones that can help create an LLC or create a trust. That's not something that we do at Advanta. we can certainly accommodate you wanting to use your IRA in that fashion. But again, even though I'm an attorney by degree, I cannot draft these documents for you, and certainly we can't provide any for you as well. So that's why we're very happy to have Kellie come on today to explain, obviously, the topic she did. Very knowledgeable on that subject, so I appreciate you coming on. If you want to have Advanta help you, we can certainly get your account open, get it funded, and help you get it started investing. My contact information is here on this final slide. So reach out to me, reach out to Kellie's information was on there as well. If you have questions on the LLC, on the trust, obviously Kellie and her colleagues at Royal Legal, very knowledgeable about that, be able to help you and answer questions. Again, answer questions that we can't. So Kellie, thank you very much for coming on today.
Yeah, and thank you, Scott, so much for hosting this, and thank you for everybody for participating and asking the great questions.